You ever looked at your chart and noticed that it is showing a little bit different than anybody else's charts? That's because it could be an adjusted chart or a unadjusted or actual price chart. Now I'm going to go over those in just a bit. Hello my friends, this is Legend. I don't know if you've ever looked at your charts and noticed maybe that they might be a little bit different than say other charts that you'll look at. I am showing here on my screen what they call an adjusted chart, and there is also the actual chart. So there are two different charts, and I'll just go and show you real quick between the two before we get into it. As I said, this is the adjusted chart, and to change it to the actual is pretty simple. You go there, click, go to adjusted. Instead of adjusted, go to actual. And this is under the axis tab here. And then you hit done, and as you can see, it is quite different, right? It's got that high of that 46.50, and that is an actual price. That is how high it actually did go. And there are reasons why you have these two charts. The actual chart here, well, it is what it basically is, right? It is the actual price of that stock. It shows how high the actual price has gone in the past and how low it has gone in the past. As for the actual and adjusted charts, each has its use, and each one can be used differently. So before we get into that, if you would please like, subscribe, and share. It'd be much appreciated. And hit that notification bell. All right, so let's jump right on in here. Again, like I said, we are looking at, right now, we're looking at the actual chart. And you can see right up here at the top here, it says actual. And so this shows the actual price of the stock. You can see here it did get as high as 46.50 on the date of November the 20th, 2024. Now, I am only looking at this screenshot here. We can look at that at a 1 month, we can look at that at a 1 year, and we can look at that at a 5 year, right? And that 5 year isn't really for 5 years because MSTY has not been out for 5 years, so it will only show the max amount of candles available. So for now, we're going to keep it on this 1 year chart, and we're going to look at the day interval. Okay, so I'm just going to kind of zoom in here, and so we can see a little bit better on the candles. And this is about where we had it a minute ago. And as you can see, just depends on what is in your screenshot here is what that min and max will be. And that's only showing the viewable area. It'll show that min and max. But as I said here, the actual, that is the actual movement of the price. All right, so what it's good for is if you're focused on the price, entrance and exit points, if you're looking at supports or resistance levels that are price based only, then you're probably looking for viewing your chart in the actual mode here, because that's going to give you the true resistance and supports. And what do I mean by resistance and support? A support is, well, kind of what it sounds like, right? It is something that supports it. So if I was to go in here and we were to draw in a support here. So let's look here, and we can just kind of, what we'll do is we'll put on a little 5-minute chart just to see if that might give us a little bit better movements here to kind of show some supports on. Now, just in this, and of course this is not financial advice. This is just me showing kind of basically what supports are, what resistances are, and what the actual and adjusted charts look like. So as you can see right here, if I was to draw a little line right here, you can see this stock price, it would go down and it just kind of bounced right off of this support. this line here at this 24.71 roughly, that right there you could say is a support at that position, right? And this area, that's a support. It is bouncing off of that and then it shot up, right? Now, if it breaks that support, then it just can come on down, right? Then at that point, you've got a breakdown, right? Because it would be going down. And then a resistance is on the other side of it. So a resistance here, we can put one, say we'll put it about right there, okay? So it comes up and it hits this line, it goes back down, it hits that line again. That's a resistance. It's resisting that price from increasing past that point. So it came back down and it's kind of chipping away at it, right? And then all of a sudden, boom, the breakout, right? And once it broke out, then it took off, right? So it took right off out through here. So that's kind of what that is. So that's a resistance when it's trying to go up and it can't get past it. That's a resistance. And then if it comes on back down, then it just kind of falls on back down, right? Because it could not break that resistance. But if it's a support, and we can even use this same little area, we can draw two lines here and just say there's your support and resistance for this little bitty time frame right here, right? This is not for the whole thing. This is only for this little area where we had come up. We hit that resistance, came down, hit that support, come up, hit that resistance, come down, hit the support, and then come up, hit the resistance, and then we broke out. So that, if you are looking for resistances and you're looking for supports, then you're probably looking to have your chart in the actual mode here. And that's what this is. This is the actual price. So that's going to give you the true resistance and support levels for that price based alone, right? But if you want to do some analysis on the RSI, you want to use indicators, the MACD, and anything like that, then you maybe want to use more along the lines of the adjusted. And to change it to the adjusted, we just simply go to chart settings and we go back to that axis under chart settings, and the y-axis adjustment type, we change that to adjusted. Now we're looking at the adjusted chart, okay? So now this adjusted chart is going to be more along the lines if you're looking for your indicator points. So if you're looking for an actual drop in the investor behavior or the stock behavior itself, then you may be looking at more of along the lines of using an adjusted chart, because the adjusted chart does not get clouded with like the dividends, right? Because that's the difference here. This dividend, it paid out the $3 in this example right here. It pays out the $3 on this day. And you can see that it did drop, but you don't have these huge big gaps like you do if you look at the actual. Because like on this day here, 12/19, and then we look at the actual, and we go to that 12/19. Look at this big gap right here, okay? On the adjusted, they were side by side. They were both red, but side by side. And so the actual says, okay, it closed here at roughly this $33.52 here, and then it opened here at the $31.58, and then fell all the way down here and closed at $28.66. Okay, and that's the actual, because that's what it actually did, right? It was actually at this price and it ended up actually at that price. But when you have that dividend, it drops by the price of the distribution or dividend that you're paid out. So that opening day, it will drop out at least that much, sometimes more and sometimes not as much. It just depends on any kind of movement after hours. But it will take out that $3 and some odd cent dividend on this day for that new candle opening. Whereas the adjusted, and we'll go back to adjusted and look at that one. And as you can see on the adjusted, on that same day, 12/19. So you do not have that gap. So what it's telling you here is the actual price behavior, okay, and the investors' behavior. Are the investors buying, selling, and what the stock is doing, but removing that movement of the dividend or distribution itself? So it does not necessarily show that $3 dropout from this day to here. What it does instead, it still pays out that $3, right? It's still paid out. But the difference is all of the history behind it, okay? So all the history over here is adjusted by that $3. So the whole chart from this candle back moves down that $3 instead of showing that price being up here and then the new price being down here, right? So you get that big gap. And what that also does to your indicators is it does affect your indicators, because the indicator shows any kind of movement in that candle. And if that candle is taking into account the dividend drop in price, in our case here, $3, then those indicators will change. They will show differently than if you have it on the adjusted. Now, so why would you want to use the adjusted? Well, simply because the adjusted, as I said, it is going to show you and allow you to analyze the price behavior and the investors' behavior of the stock. So you get a true sentiment of the stock itself, and you're not clouded with that distribution payout to where it shows a drop in the stock, but the stock itself really didn't drop, right? It didn't drop, it paid out, so the price fell down, but it only fell down because it paid out, right? It didn't fall out because it had bad earnings, right? It didn't get bad earnings and then fall down. Because if you look at a stock that does not pay dividends, then the actual and the adjusted chart will be the same, okay? Because the only time you have differences is if you have a dividend payout or some kind of payout like that. So when that payout happens, on the actual, you see that price gap, right? You see it gap down by whatever that distribution is. But on the adjusted, you do not see that. So therefore, it removes that portion out of your analysis. And by removing that out, you don't get clouded with that price drop because of the payout, because that can look like the stock itself fell, and it didn't, because you got paid a distribution or you got paid a dividend. So to analyze the stock better, you have this adjusted chart. So this is going to help you to be able to better analyze the stock itself and not get clouded with any kind of dividend payout, distribution payouts, or anything like that. A lot of times the adjusted here, you would use this if you are long-term time frame, right? Because you want to know what's the behavior of the stock. Is the investors' behavior, are they bullish or are they bearish on it, right? How has it been going when you talk about just the movement of the stock itself? It's focused on that long-term strategy, and therefore it is better used for the times that you're going to be using indicators to help you to determine when to buy in. So I just wanted to say that, there's not a wrong way to do it. There's not a wrong chart to use. You use either the adjusted or the actual, right? The actual is going to give you the actual price. That's going to be used for more, like I said, the resistance and support indicators for the price movement. But if you're looking to trade the stock, you're looking for long term of the stock, you want to know how it's moving over time, then you want to look at an adjusted, because I believe the adjusted is going to give you a better idea of what that stock itself is actually doing and removing that cloudiness of how the dividend is affecting that price. So I wanted to do a video on basically the two different types of charts here. We got the adjusted and we've got the unadjusted or actual price charts, and kind of why there are two of them. I know I did a video previously about this and how to change it back to the actual, and I've showed that in this video as well. But I just wanted to make sure we all understand why there are two different charts and how do you use them and how do you use them for your advantage, because each one has its purpose, and depending on how you are trading is depending upon which one that you would be using. So I think I'm going to wrap it up right there. Don't forget to like, subscribe, and share this video. And don't forget to hit that notification bell. It'd be much appreciated. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, legend out.